Big news is shaking the financial and Forex world today. U.S. President Donald Trump has signed an executive order that will raise tariffs on Canadian imports from 25% to 35%, with the new rate set to take effect on August 7th. This is not just a trade policy change. It's a move that can send ripples through the global economy, hitting currency markets, commodities like gold and silver, and even stock indexes. In this video, we'll go into detail on why this decision matters, how it's tied to geopolitics, and most importantly, what the short-term and long-term impacts could be for Forex traders. The White House announced that the new tariff rate applies to all products that are not covered by the U.S.-Mexico-Canada agreement. In addition, to prevent companies from trying to bypass the tariffs by shipping goods through other countries, a steep 40% transshipment levy will be imposed on such rerouted imports. Trump has defended this move as a fair rate, claiming that Canada imposes excessively high tariffs on U.S. farmers, some over 200%, and has been treating American agriculture unfairly for years. He also accused Canada of failing to take adequate measures to stop the flow of fentanyl and other illicit drugs into the United States. The political temperature rose further when Trump pointed out that Canada's recent recognition of Palestine's statehood is making it harder to reach a trade agreement. This brings geopolitics directly into economic policy, creating a complex situation where trade relations are not just about economics, but also about diplomatic positions. Historically, when political disputes spill over into trade policy, financial markets tend to react sharply, and Forex volatility increases. One of the most direct effects of this tariff decision will be seen in the USD-CAD currency pair. Canada's economy is heavily dependent on exports, with roughly 75% of those exports going to the United States. Tariffs of this magnitude could significantly reduce Canadian exports to the U.S., weakening Canada's trade balance and putting downward pressure on the Canadian dollar. This often translates to a bullish trend for USD-CAD, with the U.S. dollar strengthening against the loonie. However, traders should be prepared for volatility spikes if Canada announces retaliatory tariffs, especially on sensitive U.S. exports like steel, aluminum, or agricultural products. These countermeasures could create rapid short-term swings. In the Forex market, gold is another key market to watch. In times of heightened trade tension and political uncertainty, investors traditionally move toward safe haven assets, and gold is the most recognized of them all. A tariff hike of this scale, especially between two closely linked economies, increases global uncertainty, which can push gold prices upward. If the market sees this as the start of a prolonged trade conflict, we could see gold break through. Key resistance levels. In the short term, a stronger U.S. dollar could slow gold's rally, but in the medium to long term, safe haven buying could outweigh that effect. We could be looking at a potential rise of $50 to $100 per ounce if tensions escalate further. Silver's movement will likely mirror gold's to some extent, but with a unique twist. Silver is both a precious metal and an industrial commodity. The industrial demand side could take a hit if tariffs disrupt manufacturing supply chains, especially in sectors like electronics, solar panels, and automotive parts where silver is used. However, just like gold, silver could attract safe haven buying during periods of high uncertainty. This means silver might see upward movement, but the price swings may be smaller than gold's, and they could be more affected by any slowdown. In global industrial activity, the U.S. dollar index, DXY, will also be influenced by this development. Trade disputes often strengthen the U.S. dollar in the short term because global investors see it as a safe haven currency. However, if the U.S. economy starts to feel the strain of reduced trade volumes and higher import costs, that strength could fade over the medium term. This is why it's important for traders to watch for both the immediate reaction and the evolving economic data in the weeks following August 7th. For Forex traders, this situation presents both risks and opportunities. Traders could look for buying opportunities in USD-CAD as long as momentum favors the US dollar. Gold could be bought on dips to take advantage of safe haven demand, especially if more negative headlines hit the market. Silver might be worth trading for short-term bullish moves, but with tighter profit targets. Monitoring the DXY closely will help confirm whether the dollar's strength is sustainable or temporary. Above all, risk management is essential here because political statements, surprise counter tariffs, or even unexpected trade deals can trigger sharp market reversals. Trump's tariff hike has added a new layer of uncertainty to an already fragile global economic environment. For Forex traders, it's a reminder that markets are not driven by numbers alone. They are also shaped by politics, diplomacy, and public sentiment. The coming weeks will be critical for USD CAD, gold, and silver. Whether this escalates into a full-blown trade war or is resolved through negotiation will determine whether we see sustained trends or volatile swings. If you found this analysis valuable, don't forget to like the video, subscribe to Financial Freedom FX, and hit the bell icon so you never miss out on timely Forex insights. Share your thoughts in the comments. Will this tariff dispute cool down quickly, or are we heading toward a bigger economic showdown?